Hey everybody, this is Bob from Trade Genius. Got my good friend Phil here. We're always accused of being doom and gloomy, and macro things are doom and gloomy, but there are tremendous opportunities come from the miscalculations from the Fed and the Treasury. And yesterday we talked about what's going to happen with the borrowing. Now we're going to talk to you about maybe a tremendous opportunity to make a lot of money. So stay tuned.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening. So, Phil, about 30 years ago, the same thing our federal government's planning on doing next year has been tried before. You want to kind of share people a little bit what's going on here and the opportunity it may present to us?
Yeah, so let's slip over to this slide. So basically what's going to happen here, and we've talked about it before, but now we have definitive timetable as to when this is going to happen. But get used to the term Treasury QE. Now, those of you that have watched the show, you guys understand what QE means. Typically, the quantitative easing is done by the Federal Reserve when they're buying bonds from the Treasury and then turning those bonds into liquidity into the market. And that's why the markets magically go up. In this situation, the Treasury would be doing the QE. So, and the reason for this is because we're at interest rates that are at really critical mass here for the kind of debt that we are carrying. It's unsustainable. Bob and I were talking before we recorded this, and it's just we're entering into the realm of madness when it comes to another $4 trillion of debt being issued over the next into 2025 with this new debt deal. It's being drummed up, and so the Treasury has decided they're going to announce a buyback program. So essentially, they're going to address what they see as an illiquidity issue with the bond market. And this is very similar to what Japan does, right? Because Japan has a 0.5% cap on their 10-year. And even at that, they're sometimes fighting the market so much that they have to hammer on their yen. The yen drops in value because they're trying to essentially burning as much yen as they possibly can. They have no limit on it. It's just as much yen as they need to burn to buy enough bonds, and sometimes they're the only ones buying the bonds at some of these auctions, which is like the snake eating its tail, Bob. But it really hammers on the currency, and so this is going to begin in 2024. And so essentially, what we're dealing with here now is yield curve control. So we've talked about that. We haven't done it in 2 decades, but this is going to potentially give us a pretty good kick in the butt in equities and all risk on assets. So when we talk about, we've said for a long time the yield curve right now with when it really inverted, right, and that usually gives us about 100 weeks of bear market, L recovery, whatever you want to call it. This could actually truncate that time and actually give us a bottom in this market and a new bull run, which would be good for things like Bitcoin and gold. I think are going to be the biggest benefactors of something like this. People talk about the dollar dying. Well, the dollar is going to get hammered if they implement this, and they're going to, unless something changes between now and 2024. But this is the plan. So I think if that's the case as far as a dollar, Bob, I think you're crazy if you're not into some asset that's going to really be able to hedge inflation. Personally, I think Bitcoin is the alpha for that stuff, but you're going to want to be diversified. I mean, that's just the responsible thing, right? So I think things like gold, things like silver, I think real estate, get your deals now when this market really starts to tank. I think everybody's going to be very scared into the end of the year if this goes the way we think it does into the end of 2023. But if you understand what's going to happen here in 2024 with these buybacks and essentially yield curve control, then you're dealing with ultimately inflation, I think, because the dollar's buying power is going to drop. And I think that's what everyone's been kind of clamoring for, but they're a little early to the party. Whereas I think the forces currently are going to drive the dollar up into the end of the year. And then you're going to see what everybody is expecting to see with a weakened dollar going forward. And I don't see any end to this buyback program. They've just said they're going to announce it. And I think Japan started that, right, Bob? And they're still doing it to this day, and it just zombified their market.
Yeah, and the difference between Japan and the United States is Japan was running a trade surplus, so they were they were able to
Right.
absorb some of this stuff.
Big
And
difference.
that may end up being the case here too, where you're just gonna see a lot of reshoring of manufacturing because nobody's gonna trust anybody's currency. And I just want to let people know too. Everybody said, "Oh, the dollar's gonna die." Blah, blah, blah. Well, the dollar may not die against any currency whatsoever. The dollar is going to die against what I would call the precious assets.
Right.
Those are the assets that they're not malleable. You can't forge them. So that's why I think Bitcoin is going to do extremely well. Like gold and silver are going to do very well. The miners that mine them will do very well.
Yep.
And in fact, some real estate is going to do really well too because people are going to scramble. And then oil is going to do really well. But the really big thing too, guys, is that once Yellen has filled up her treasuries here and build up a surplus treasury to do this in 24, remember elections coming up. Last thing Biden wants is a stock market crash on his watch. Is that, this is where TLT, you'll probably get a double out of it. So, 20-year bond, yielding wherever it's at that point in time, they're going to drive the 20 and the 30-year yields down hard because that's where the expense is, and they're going to create a value in TLT. And the other thing too is depending on how they do it, if she tries to, if Jerome Powell's sitting at 6% money here for his Fed funds rate, Yellen can't really chip that down until he lowers that, but she'll chip everything else down along the curve. So that's what you have to watch out for, and then we'll see how long Powell can sustain those prices on the short end of the curve here before the whole thing blows up. But yeah, look, we're turning Japanese. Okay, and this is the last gasp. Okay, if you look at Exeter's pyramid, inverted pyramid, now we're driving down to the non-liability assets. Those are the ones that are going to create the most value. And the dollar is going to suffer. Okay, but the dollar is not going to suffer against the yen or the yuan. It's going to suffer against, as Phil said, it's going to suffer against what it can buy. So you're going to have to start being clever here and start shifting assets to protect yourself through this storm. Remember, the United States government can't default, Phil. It can't. Not that it can't, it just can't, because the Treasury could just create dollars. They're just doing it in a kind of another fraudulent way of kind of laundering it through a program. So we don't see that that's exactly what's happening. So dollars are going to be created to absorb this purchasing of these bonds. And their whole goal here is to drive the interest expense of these bonds down to eventually zero. I always tell people, I said, what's the interest charge on $32 trillion at 0%, Phil? Zero. Okay, but they're going to transfer all that risk into inflation that's going to run 5, 6, 7, 8% nominally for the next 10 years. The way they're doing this, your standard of living will be cut in half in 10 years, unless you protect yourself. So that's kind of what we're looking at, but it's tremendous opportunity. There's alpha here. And so you can, an alpha means you can beat the market and, stay ahead of for your standard of living. So I'm actually excited about it because now a plan is coming together here and they have no choice, and you can front run it and be positioned, and hopefully we'll be able to guide you through that.
Yeah, and I think the gold bugs, the metalheads, are going to get vindicated here, and it's been a long, long haul. But I think this is where you're going to get your 10x move on those things. So, like Bob said, great opportunity. 10x, I think, on Bitcoin too, maybe even more because of how finite it is. But those are those assets that I think are going to benefit most from all this. And I think this is ultimately what the end game was when Bernanke kicked off, basically the QE, right, back in 08 to try to save the market. It wasn't what they were supposed to do. They should have gave the market their medicine, but heaven forbid the bankers have to suffer through a couple years of misery, right? So here we are. So might as well profit from it while you can. All right, Bob, well, that's going to do it for this episode. Thanks for watching. Please hit like and subscribe, smash that notification bell, and we'll see you on tomorrow's episode. Thanks for watching. Bye-bye.
Bye-bye.
Trade Genius.